These are the top cryptocurrency news stories of the week that you need to know as an investor. Got a wide range of different topics that I'll be talking about today, from banking adoption to regulatory news to dog memes. Dog memes are back in fashion. I'll be discussing all of that with you in today's video. My name is Lark. Every day I make videos talking about cryptocurrency investing, so if that's a topic you'd like to stay up to date with, maybe learn some more about, make sure you subscribe to the Lark Davis channel. Also, if you could take a quick second to tap on that thumbs up button for the YouTube algorithm, that would be much, much appreciated. And if you do want to know when I put out a new video, make sure you click on that notification bell. By the way, if you want to trade some cryptocurrencies, I can recommend doing that over on Femex. You can long, you can short, you can buy on spot markets as well. Bitcoin, Ethereum, Solana, Chainlink, all of the most popular coins. Use the link down below to start your account. You'll get 10% off of your trading fees and up to $1,200 in trading bonuses. $100 just for doing basic things like making your first deposit, doing your first trade, and $1,100 for depositing a Bitcoin. So go ahead and check that out using the first link in the description. Let's get into the news. Dog memes are back. They're back, man. Oof. Dog memes. Shiba Inu up like 400% this week. It has been crazy, man. Crazy. Dog memes. Dog memes. It's crazy. Well, congrats to all of the Shiba Inu holders. Dog meme. I'm surprised. I'm surprised. I keep doubting dog memes, and they keep popping back. Shiba Inu, at the time of recording this video, was like the 12th biggest cryptocurrency. You know, the funny thing is that I was talking to my brother, and his wife was saying, we need to buy some Shiba Inu. I say, no, don't buy Shiba Inu. That's crazy. It's the dog meme. What's up with the dog meme stuff, you know? That coin. And here we go. She was right. I was wrong. Dog memes, man. Dog memes. They're back in fashion. They're back in fashion. For how long? Who knows? But right now, we are seeing the dog memes pump up. Of course, Shiba Inu rallying big time. Dogecoin is up. All of the little dog coin impersonators also rallying on the back of Shiba Inu's big dog meme inspired rally. There you go. Dog memes are back, guys. Now let's talk about NFTs, because this is, I think, a really big and important statistic to have a look at. NFT trading volume has hit $10.67 billion in Q3, up 700% from the previous quarter. We are seeing NFTs going mind-bogglingly crazy. And it's a good thing. I'm excited about NFTs. I like NFTs. I think NFTs are cool. And I know there's a lot of people out there who still don't really get it. They think, well, I'll just right-click save, and I've got the NFT now. It's like taking a selfie with your phone in front of the Mona Lisa. You don't own the Mona Lisa once you've done that. But I understand there's a lot of garbage out there, and there's a lot of the NFTs that realistically in a year's time are going to be worth zero. There's pumps and dumps and scams and the exact kind of grifters and scammers who you saw launching garbage ICOs and raising millions of dollars, and now launching garbage NFT projects, which are literally just, they're copying and pasting the code of more popular projects, launching them on different chains. It's ridiculous. There's a lot of scammy stuff going on in the NFT space. But all that scammy stuff is going on because the NFT space is so promising, because there's so much good stuff in the NFT space. If there wasn't money to be made, the scammers wouldn't show up. You understand that, right? So we're seeing, you know, these premier collections like art blocks or CryptoPunks reaching hundreds of thousands of dollars per coin. We see lots of cool new collections launching all the time that you can get in on as an investor. If you want to be a speculator in NFTs and come in and play that game, get in early. Get in early on new collections. Get your nose to the ground. Try to find those hot new collections that you like. Buy some of them, and of course, try to flip them for more money later on. It's a risky game, but people are playing it pretty hard right now. And what I'm really excited to see is the expansion of NFTs beyond Ethereum. Because let's keep it real. Ethereum right now is being dragged down by NFTs. We see mega rich users who can afford to spend hundreds of thousands of dollars on NFT, and then, well, if the gas fee's $100 for it, whatever, c'est la vie. But if you want to buy an NFT for $100 on Ethereum, you have to pay almost the same amount in gas fees often, not all the time, but often, and that's just unworkable. So what I'm excited to be seeing right now is the rise of Solana-based NFTs. We've seen a lot of people making a lot of money off Solana-based NFTs. We've seen some really cool Solana NFT collections like Space. There's a Galactic Geckos. Galactic Geckos have gone up like 50, 60x, 75x or something like that from the time of minting until now, which has only been a few weeks. So we're seeing Solana-based NFT collections getting some serious traction in terms of returns because you can buy and sell NFTs on Solana for pennies. It caters to a whole new market of people who can come in, buy an NFT for $100 and spend 10 cents or 20 cents or whatever on the transaction fee. Game changing right there. Now, I shared some really cool new Solana NFTs to keep an eye on in the newsletter this week. So if you're a newsletter subscriber, make sure you go and, of course, read over that section of the newsletter. Next up, Credit Suisse. Big bank, of course, in Switzerland. They are creating Ethereum-based shares of a Swiss resort. Now, I love this story because we're seeing so many legacy finance players building on top of public open source networks. These guys aren't creating their own walled gardens. They're saying, hey, let's just go use Ethereum to release our security tokens. Security tokens, they're a funny one, because security tokens, remember back in 2018, we were talking about security tokens, then 2019, then 2020, they're supposed to be the big thing. The problem with security tokens, regulations, man. The regulators keep screwing security tokens up. They're making it really, really difficult for any old company or whoever might want to issue out a security token on a public network to do that. The regulatory framework's just not in place right now. Because when you do that crossover between the traditional world and the crypto world, you've got this barrier of the regulators in the middle saying, no, you can't move these traditional assets into the digital world. But we are starting to see some players doing just that. We're seeing some banks that are starting to innovate in this area. Societe Generale, of course, they are issuing out bonds on Ethereum, and they're going to move those bonds into DeFi, which is pretty game-changing stuff. Here we have Credit Suisse issuing out tokenized shares of a Swiss resort on Ethereum. That's cool. By the end of this decade, I'm telling you, hear me now, quote me later, we're going to see just a massive, massive percentage of the legacy markets move on to the blockchain. They're going to be on Ethereum. They're going to be on Cardano. They're going to be on Solana, a couple of their top blockchains. It'll be incredible. It'll be absolutely incredible. So this is a big story. Just another one of those nice little feather in the hat kind of stories that show that progress is being made, that new use cases are popping up all of the time for crypto. This was a big one. Moving on to the next story. This is a big one here. The US FDIC is said to be studying deposit insurance for stablecoins. So-called pass-through coverage would ensure the holders of these tokens against losses up to $250,000 of the bank holding the collateral were to fail. That's pretty interesting. Isn't it? This would be cool. Now look, I've always thought and I've always said on this channel that FDIC insurance is, to be honest, a bit of a false security net. People seem to think that I'm going to be covered. My bank goes under. I'm going to be covered. The FDIC only insures around 1% of U.S. deposits. That's all they have. They don't have the whole system insured. It's like 1%. 1%. So if a moderately big bank were to go under, then of course that's probably not going to happen because, as 2008 proved, there are certain banks that are just too big to fail, right? The moral hazard has come in. But still, in that situation, if a bank that controlled 3% of U.S. depositor money were to collapse, the FDIC would not be able to cover it. They would only have a third of that money. Government would have to step in, bail out, et cetera, et cetera. So the FDIC, it's not really what a lot of people think it is. But that being said, if we do see FDIC insurance being passed on to certain stablecoins, come on, that's big. That's big, because that is the, if nothing else, it is a seal of approval, and it is saying to investors that This is a serious asset. You can hold stablecoins. You're going to be safe. If your stablecoin provider goes under, well, we got you. Up to $250,000, of course. So that's pretty cool. That's pretty cool. I think it's one of those things that will make a lot of investors feel better. It's one of those things that'll make a lot of investors feel safer getting into crypto, knowing that the FDIC is insuring some stablecoins. So I like it. I like it. I dig that story. Next up is U.S. Bank. Covered the story earlier this week, but I wanted to repeat it is a top news story of the week. U.S. Bank is now providing custody services to their customers for Bitcoin, Bitcoin Cash, and Litecoin. We are going to see every major bank launch some kind of cryptocurrency services over the next few years. In fact, over the last year, we've seen quite a few major banks launch services for customers. I'd say of the top, let's say a top 10 US banks right now, probably 5 of them have some kind of cryptocurrency service. And that ranges just from letting their elite customers offer, CME futures trading for Bitcoin to doing things like, you can actually now custody your Bitcoin with us, and to others, you can buy your Bitcoin with us and we'll custody it for you. These are great stories. This is great adoption. And yes, I want to see it for regular retail customers as well. Almost all the stories we've seen in the US is just catering to the elite clients. What we want to see is for your mom and pop, your Uncle Joe, you, your neighbor, your coworker, everybody to be able to go to their bank and buy Bitcoin. That's coming. That's coming. That's coming. That's coming. Those relationships are being built. Those relationships are starting to come to fruition. PayPal launching that exact service for people. That was the shot heard around the financial world. All of these banks, yes, they're starting with the rich clients, but I guarantee you that if you're to look at these banks' sort of 2 to 5 year strategic plans, they're all planning on launching retail-focused cryptocurrency services. That brings a gargantuan, big superlative word of money into the market. No one's bullish enough. Not even close. Not even close. Next story for you. JP Morgan institutional investors are favoring Bitcoin over gold. Although JP Morgan also said recently that institutional investors are favoring Ethereum over Bitcoin. So I guess it goes Ethereum, Bitcoin, then gold. But it's still interesting. It's still interesting because what we're seeing is a major endorsement by the biggest financial players that Bitcoin is a store of value, Bitcoin is a serious financial asset, and probably the most important realization to have about Bitcoin is that all these serious investors are looking at Bitcoin as a gold replacement. But here's the problem. Here's the problem with that. The problem with that is that Bitcoin is worth 1/10 of the market cap of gold, which means if you are buying Bitcoin based on the idea, this is a gold 2.0, this is a gold replacement within my portfolio, then here's the straight dope. You are buying an asset that's still in price discovery. You are buying something that will be worth the same as gold, probably more because of the verifiable scarcity, the portability, all that fun stuff. And yet, it's only worth 1/10 of the price. That's very interesting. I think the value proposition, this seeing Bitcoin as the safe haven against inflation, the hedge against inflation, the store of value on par with gold in your portfolio, it's catching on with a wide range of investors right now. We have big famous macro investors out there talking about it. We have regular investors starting to understand this. Gold's still cool. I like shiny metal coins. They're neat. But realistically, Bitcoin, it's a 10x from here to get to the market cap of gold. And it's going to do that. The only question is when. And I think that Bitcoin's going to go to $1 million a coin. Seriously. Which is twice the market cap of gold. Only question is when. The only question is when. And more institutional investors are starting to look at this and realizing, man, Why would I buy gold when I could buy Bitcoin, which is worth 1/10 of what gold is right now, but will be worth the same or more in the future? Final story for today. The IMF managing director has said that 110 countries are at some stage of developing a central bank digital currency. This story blows my mind. That's more than half the countries in the world. Most of those are the world's major economies. So what we're talking about here is that in the next few years, the majority of the world's countries will have issued out their own central bank digital currencies, basically a cryptocurrency fiat dollar or yuan or yen or pound or euro or rand or peso, whatever you might want to apply to your local currency. They're all doing it. Well, not all of them, but most of them are doing it. This is insane because pretty soon everybody who has a mobile phone is going to have a central bank digital currency, basically crypto wallet, in their pockets. Now, what this means is that there's going to be almost no friction between getting money from the legacy world into the crypto world. Let's say that you start receiving your salary paid out in central bank digital currencies to your central bank digital currency wallet on your mobile phone. And then it's just a short hop and a skip to send those dollars or whatever other fiat over to a crypto exchange or into DeFi. Because as soon as these start launching, all of the nerds out there in crypto, they're going to start launching bridges to get into these things. And the bridges will allow you to take your money from your government wallet out into DeFi, to buy Bitcoin, to trade, to find high yields. No one's bullish enough. No one's bullish enough. How is anyone not this bullish? We've got to be more bullish, guys. We have to be more bullish. No one's even close to bullish enough. 110 countries are about to issue out central bank digital currencies. Crypto fiat is going to be everywhere. And the friction to get that crypto fiat into the native crypto world is just going to disappear. All these people who are then also going to be comfortable with using these crypto monies are going to find it so easy to then start using native cryptos to buy Bitcoin, to buy Ethereum, use DeFi, all that stuff. The difficulties will be abstracted away, and you're going to see new wallets coming out beyond the government issued wallet. A wallet which will let you have your central bank digital currencies, and they'll then give you access. Oh, would you like to put that into Aave? Click, you're done. Now you're earning 5% on your central bank digital currencies. Your bank's never going to give you that. This is an extinction level event coming for the banks that don't adopt, right? We see some banks adopting this crypto tech. Those banks are going to be fine. Other banks, they're in trouble. They are in trouble. This is a big story. Central bank digital currencies are going to just blow the lid off of the entire cryptocurrency industry. All those assets are just going to go so sky high. It's going to be crazy. Anyway, just my 2 Satoshis for the day. The big news stories of the week that I think that you as a cryptocurrency investor might want to have on your radar. Thank you so much for watching today's video. Oh, right, your question for the day. When central bank digital currencies come out, are you going to use them? Or are you going to be like, well, maybe this is like the new social credit system. Maybe it's a bad idea to use these. I'll stay away. Just stick with Bitcoin. Or are you welcoming the introduction of central bank digital currencies? Thanks so much for watching today's video, and peace out till next time.